we had a bunch of traders just gamble the news.
Oh no.
They full ported their accounts times 5. What did we do? We kicked them all out. If you're trading like that, you've got zero longevity. Take Profit Trader might not be the best for you. It really depends on what you're looking for. You're looking for the best rules, the best payouts. It's very hard for a prop firm to have all of it. If they have all of it, there probably is something going on under the hood where we didn't want to be that. By going a little bit slower and not being the first, it allows us to get more data and make the program better for the traders, but also have that change be more sustainable. Part of our problem as traders is that we trade too often and too big. You have 100% risk of ruin.
Welcome back to Prop Firm Match, your trusted resource for all things prop related. To succeed in the prop firm game, it's important to understand what goes on behind the scenes. And today we have another special interview for you. We are joined by James, founder and CEO of Take Profit Trader. So James, great to have you here today.
Yeah, thank you, Nav. Appreciate it.
You're welcome. So could you start by telling us a bit about your journey? So from your years playing pro hockey to running trade contacts to founding Take Profit Trader in March 2021.
Oh, yeah. That seems like a lifetime ago now. When I always tell the story of when I first got to Europe, was playing hockey, I was sitting in my flat in Germany, and it was this massive flat in Cologne, and it was beautiful. But it really hit me that I was like, man, I'm not going to play in the National Hockey League for 20 years. What am I going to do after this? So, I researched some things, and I figured that since I was in Europe and I was, just the way that my hockey schedule worked and the way that the world clock worked, I was back from practice at about noon local time in Germany. That was like 6 a.m. Eastern time. So the markets had yet to open. So I figured at the time I was alone, I didn't have a family, and I was like, there's only so much like drinking you can do after practice, and we did our fair share of hanging out, but there's just a lot of downtime as a pro athlete. And so I started to learn how to trade. And then, because I was American, I think if I were European, I would have probably started in FX or CFDs, but because I was American, I was familiar with, the derivatives market. So I started originally with cutting my teeth with the S&P 500. So like at the time there was no micro. It was like I cut my teeth on the ES, and those early mistakes were expensive. There is $50 a point at the just like it is today. But there were no. I mean, at the time this was 2010, so like Top Step was just coming out. Nobody really knew who they were. Prop firms weren't really a thing, so you were on your own. I mean, luckily for me, I was playing hockey, I was making good money, but I paid a large tuition to the market, and that's really how I got my started trading. And then, as I was always under this urgency that I had to do something. I had to learn trading because when I was, it was contract to contract. It was a year, 2 years, sometimes 3-year contracts, and so I was always like, okay, it could be over tomorrow. It could be over tomorrow. I could get injured. Like, what am I going to do? Because I'm not the corporate desk type person. So, I kept going, and I ended up, kind of turning the corner with the help of another guy that had made a lot more money than me in hockey. And he was like, hey, you should just let me back you. You're pretty good at this. And then from there I found prop. And then after that started working, I started Trade Context, which you mentioned, Nav. And Trade Context was really me teaching other athletes like financial literacy for the time.
Oh, wow.
Financial literacy for when they were done, because I mean, you see, footballers in Europe, and there's stories all the time, professional athletes in America, like, hey, this guy made $100 million and blew it all because he had no idea what to do with his money. And I'm not saying that day trading is the smartest thing to do with your money either. It's a risky endeavor, but at least you can have a conversation and understand the market. So that's really why Trade Context was born. And then, I just thought that the days of teaching people how to trade, I wasn't charging very much, just a little bit for my time, but charging people to teach them how to trade didn't make any sense to me, because it's like, if you're so good, why didn't you just do it yourself? So what I started to do was find these guys funding. It's like, hey, even if you have the money, just use somebody else's money, because the tuition will be cheaper anyway. And so that's kind of like full circle. I did some consulting for another prop firm. At the time, it's called Speed Up Trader. And then I just was like, hey, I'm just going to go out and do this myself. Started Take Profit Trader, and here we are. Like COVID happened, everybody was at home, everybody wanted to trade, and the industry's kind of blown up since. It wasn't really, hey, James is smarter than anybody else. It was just kind of like right place, right time. But I had the experience because
Yep.
I've done it. So yeah,
Yeah. Okay.
that's the whole
Wow. What a
story.
journey. Holy moly. What a journey. How much did you pay in tuition, let's say, like before?
I always say like because I don't want to overblow it, but it was six figures. So I always say like 100,000. It was probably more than that, but you can't put an exact number on it because it was so many years ago. And that tuition wasn't like a one line. It wasn't like one trade. Hey, I woke up and I was down,
Yep.
150 grand. There were some really interesting moments. Like I remember specifically getting off the ice one night after a game, and it was like the games ended 9 o'clock East, 9 o'clock local time, so that's about 3 o'clock Eastern, with a call from the broker saying, "Hey James, like you need to close your oil positions unless you want to accept delivery of 1,000 barrels of crude oil." So like
Oh my gosh.
just funny like learning experiences along the way,
Yep.
and that's really I have so many of those, just like anybody that's done this, and that goes back to what we tell our traders today. It's like I'm not just a business guy sitting behind a desk that's never traded. I've made every single mistake that you've made, every single one of them, and that's I think that resonates with people because like the authenticity is what people care about. They can see right through the bullshit.
Mhm. I love that you were a trader previously as well before you actually ventured into this space. So I'm curious actually, because what did you feel like was missing in the prop firm space that you wanted to start your own?
I felt like when you did make money or were successful, if you got by the carnival rules, then all of a sudden, like it was so hard to get paid, and then it was like it got to the point where I was like, "What's the point?" It's like I don't have to put up my own money, and then people weren't also weren't putting you in the live market, so you were just kind of stuck in a simulator, and it was like a big game again, going back to carnival rules, and that's why TPT really prides itself on sending the most traders to live. So there's not this like conflict of interest and all these like gotcha, kind of moments.
Yeah, that is dope. So, the prop firm space is packed right now. Like, so when you started, obviously you're dealing with these carnival rules and like you just said, Top Step, it had just begun like in 2010. And so even by the time we get to 2020, I noticed as well, because that was when I started trading, that the prop space felt like it was just starting out. Like it still felt very fresh. To find a firm that you liked was a challenge. So with the prop firm space being so packed right now, what does make take profit traders stand out from the crowd?
I think that a lot of prop has been commoditized, as you're saying, is like, and that's why the only way to compete now is to like try to come in and like undercut people's rules. But like because of all the competition, a lot of the margins for the company have been pulled out of the market, and that's why you see more companies coming in and then failing because they're trying to do something to gain market share, and it's just not sustainable. So, we've tried to you know be more methodical about when we change things, and I think that that's a big part of longevity as a trader, as a company, and trying to articulate to our clients that take profit trader might not be the best for you. It really depends on what you're looking for. You're looking for the best rules, the best payouts. Like it's very hard for a prop firm to have all of it. If they have all of it, there probably is something going on under the hood where they're either not going to pay you, delay paying you. So we didn't want to be that. So we wanted to have, yeah, by going a little bit slower and not being the first, it allows us to get more data and then to be able to rely on the data and do our best to make the program better for the change for the traders, but also have that change be more sustainable.
Yep, exactly. No surprise rug pulls.
Right. Yeah.
Okay, sweet. So you mentioned like you have one of the most popular live programs out there, which is the Pro Plus. Or you said that your journey for traders to come to live is quite smooth. Tell us a bit about Pro Plus. What is it? How does it actually work for a trader moving from a simulated account to a live account?
So we have Pro Plus is our live market accounts, right? And so at TPT, we allow you to trade 5 Pro Plus accounts at the same time. 150K accounts would be, 750K of buying power. And we're one of the only firms, I think, if not the only, that allow multiple. Most people will take you from, let's say, you go from simulation of 5 to 1 in live. And there's good reason for that sometimes. I mean, there are, I'm sure we'll talk about this, but there's market regulations like the CME has certain things that when one trader is controlling many accounts, it gets harder to say, hey, nah, you can't do this because we're allowing you to trade 5 accounts. And because we're allowing you to trade 5 accounts, you've got to be very careful about what you do because some things can be looked at from the exchange perspective as non-competitive trading and you're trying to not take a bona fide position in the market. So there's drawbacks that come with those 5 Pro Plus accounts that we have to be very careful about. But we do take those. We do allow the traders to do that and just let them know that hey, you got to be careful when you're trading all 5 of these accounts. So that's the first piece. It's the multiple accounts. The second piece is there's no like throttling of in your normal Pro Plus accounts of like a scaling plan or something like that, where it's like, hey, you can trade one account until you make $500, one contract and you trade till you make $500, and second contract when you make 1,000. We try to make it so that it's the same account across the board. So if you were, successful in this and you go to this and you have the same opportunity to be successful. Now, as we put more people in live, there have been some trading strategies that we've seen, again, as we've gained more and more data points. And I think I said this yesterday, like 6.5 billion sides traded since September of 2025. So there's a lot of data there to look at and understand what works and what doesn't. So there are certain live accounts that are still live, but maybe instead of 15 contracts, you get 5 to trade with. So we scale you back because you shouldn't be in one of those accounts trying to make $50,000 in a day and risk losing the account. Like that's not really trading. That's more kind of like gambling. And so we have a subset of our Pro Plus accounts are in what we call like development. But as far as the percentage of traders that are in our system trading live, I think we lead the industry in live traders.
Very cool. Very, very, very cool. So do you have any updates planned for the Pro Plus account?
Yeah, we have. There's a lot of stuff in the pipeline. I don't know how much I can share here. Or my marketing team will kill me.
Everything. Tell me everything.
So
I'll
I
tell
do
you if
know
it's good or
that
bad.
the talk of the town is single stock futures.
Okay, yes.
The volume has been very low so far. It's been spoken by a lot of traders. I know the CME is pushing to increase that. That's something we're really excited about, and will likely be included in our Pro Plus accounts. We might even have a separate account, Pro Plus account for single stock futures to see how, again, just to try to segregate a little bit so that we can see, hey, do the traders like this? Are they actually trading it? Is it something, so adding new products, I think, is to answer your question, adding new products to Pro Plus, and then getting, if you saw today, there was news about the Nano product from the CME. Like that's going to be a big one. The Nano is essentially, when I started, there was only the ES. Now there's the micro ES, and now there's going to be the Nano ES, which is
Oh, yeah, they're doing that finally.
1/100th of an ES, so 1/10 of a micro. So if a micro is $1.25 for a tick, now the Nano is going to be 12 cents, 12.5 cents, right? So again, it's like it's a product that can get maybe those FX traders over that are used to trading it, on small accounts on high leverage, and like maybe then we can offer additional products for the Nano, so that we can get more traders involved in futures and seeing not only from single stock futures but also Nano nano equities or nano crude oil or nano gold, whatever, to get involved in the market, because it's derivatives. It's when you trade on an exchange, it's a special thing. It's there's no shenanigans going on. You're getting, the order book is right there. You can see it. There's no B book where like the broker's making up your price. There's none of that.
Yep. Yep. So I'm obviously all about like the psychology. I'm curious about how you think it's going to affect traders to be able to trade nano versus, for example, a mini.
We've seen a huge move towards the micro. Originally, people didn't want to trade the micro because they were like, I can't make as much money. It's not as sexy. But then they realized, well, I could just trade 10 times as many micros, and then I could scale in and scale out a bit better and manage my risk a bit better. And so I think that the same exists for the nano. I think that, now I've always told traders, if you're worried about the stop when you put the trade on, you're probably trading too big, right? And so I always traded my best when I wasn't worried about the trade. I was like, I can go up and get a drink of water or something like that. I'm not stuck to the screen. And I think that the nano gives you another layer to do that. It's step back and allow your trades to breathe a little bit. Because again, I've said this ad nauseum to our audience. I think that part of our problem as traders is that we trade too often and too big. And we see it all the time at TPT. It's like, if a guy's going to blow out, I can tell you what he's doing before he even does it. Like he's trading too often and way too big. You have 100%, I always say this, talking about a psychology coach, you have 100% risk of ruin if you're trading, if one trade is going to take 50% of your drawdown. Like you're ultimately going to flip head 10 times in a row. So even if you have the best strategy in the world, so what traders get in this endless loop of, oh, my strategy isn't good enough because I'm losing. It's nothing to do with your strategy. It's sizing and risk management and like the way, so you get this mind like virus that you start circling constantly and just spinning your wheels because you think it's one thing and it's not that thing at all.
Well, 95% of human action is actually driven by the subconscious, and only 5% of the actions are actually conscious. So when someone is in a trading spiral, it means that they've wired in habits into their brain so that their brain is reacting before they've even had a chance to process what's happening. So that's why a lot of the times like traders are like, what am I doing? Like even while they're continuously clicking. They're like, what am I doing? Like, what the hell? And they're like, please just get me out of this trade. I won't take another one. Just get me out break even. Then they get blessed and they get taken out of break even. 10 seconds later, they're back
Do
in.
it again.
Because
Yeah.
their subconscious is in control. So they have to actually rewire their subconscious
Yeah.
if they want to flip
Have
the
you ever read,
dividends.
enough? Have you ever, I'm reading right now, I think it's called like the time between, the moment between like dog and wolf. I don't know if it's about a trading, it's about a psychology and like, uh, cortisol and how, testosterone works. And it does a deep dive into the clinical aspect of what happens in your brain when you're on a winning streak and a losing streak. It's fantastic. I'm not finished with it yet, but it's a fantastic book for traders. It's explaining all of the things that you're kind of talking about. It's, you're
Yeah.
invincible when you're winning, and you're probably too risk averse when you're losing. However, I'll say at TPT, I don't see a whole lot of risk aversion.
Okay, well, that brings me to my next question, actually, which is that most traders, they lose money once they go live. So how do you actually protect the firm when placing traders into a live environment when that is the statistic?
Well, we hope that our modeling vets out the people that will flame out in live. I think that comes with experience too. Is you're never going to be good at something when you first start. It's always going to be. It's similar to the way I used to feel when I would increase my size. It's like, hey, I'm not doing anything different. There's just a bigger number on the screen. Like I should still be able to perform the same way, but the reality is you just don't, right? And so I think that with experience, some traders just you will get better at it. The firm, we don't have any like hard cutoffs of like, hey, you've lost 3 accounts, like you're out. I'm not saying that we won't ever do that. We do it a little bit differently at TPT, where we say if you have severe divergent, I was just having a call about this before I got on with you. If you have severe divergent performance where something you're doing in simulation is not working in live, it causes us to take a deeper look into your trading, right? And there are many reasons for that. One of them can be psychology, as you mentioned, Nob. One of them can be just unrealistic kind of trading habits where, you could, again, if you're, think about flipping coins. If you're flipping coins, you could flip them well and you're really sized up. You're going to look like a badass trader for a little while. But that doesn't mean that you're really a good trader. You're like, oh, you're just taking a lot of risk and you're just happening to flip it the right way. So the divergent performances we take a harder stand on now because, again, we send the most traders to live and we have to protect those funds. It's just the bottom line. So if we see, I saw this the other day, a really good example. This isn't anecdotal, this is real. There were, since we allow 5 accounts per trader, there was news. It was Amazon reported earnings. It was the day Amazon reporting earnings. It's, I don't know, late July. And it was at 4 o'clock, and we had a bunch of traders just gamble the news.
Oh no.
Right?
Oh
So
no.
they full ported their accounts times 5, and there were 10 traders. There were 10 traders that lost a combined $600,000 collectively because they had so much slippage because there's no liquidity, right? There's no liquidity during like these news events. However, there were 3 traders that were successful because they flipped the coin the right way. So you ultimately got people saying heads, tails, right? So what did we do? We kicked them all out.
Yeah.
Hey, just you congratulations, take your money, but you're not a fit for TPT. Like if you're trading like that, you've got zero longevity, like zero. So we eat the loss of those people that flipped it the wrong way, and we just part ways with the guy that flipped it the right way. And people will go on Reddit and say, TPT kicked me out because I'm doing well. It's like, there's always so much more to the story than you read online. It's crazy. But we're like, yeah, okay, if that's what you think,
Yeah, yeah. Well, when people are trading live, they are trading with real funds, and so it's going to affect the firm. So I understand that you want to protect your capital as well. So it's kind of something that traders need to be aware of. And I actually think it's so cool that you even let people trade 5 live accounts, as opposed to like merging them into one, because that is something that so many people are doing now. So for me, I'm like, if you've got the benefit and the blessing of having that, why would you screw with it in such
Yeah.
a careless way? Um, so
But
yeah,
no, you see
I
it
do
across the
understand.
industry now, though. Like the firms are putting more traders live, and they're having less tolerance for like I don't want to say like the entitled behavior of some people. And I always say this on these podcasts is I'm not speaking to everybody that's listening to this. It's actually like 2 or 3% of the people. And
Exactly.
those 2 or 3% of the people, like everything, are really loud. But for the most part, like most people trade our funds like they're their own, and that's what we want. We want people to like
Yes.
protect it like their own and care about it, not like, oh, this isn't my money. I don't give a shit. Like, you know what I
Yeah.
mean?
I completely back that. Um, I'm with you. I would love to see like how some of your traders are trading, just obviously being someone who's fascinated with psychology. I love seeing the way like different traders are approaching the different rules and like the effects that is having on their results. Or even like someone who has been a fantastic trader and then suddenly they just fall off. I love finding out like what was that moment, what happened, what turned, and then basically getting them back. So if you want to show me statistics one day, feel free, my
Yeah,
friend.
yeah.
Feel free.
I was gonna say we could have one of these, and I could share like the
I would
dashboard and be
love
like,
to.
hey, you want to see like what not to do? Look at this. You want to see like what generally we see works? Look at this. And again, I'm not here to give investment advice. I'm just telling you from in generality, like in general terms, what works and what we see. It doesn't have legs. It might work today, and that's the frustrating thing I think, and I understand it why traders look at their trading through their own lens and be like, hey, but it's working. And I'm like, yeah, but we're looking at this in totality. You and, another 10,000 traders, for instance. We're not looking at this through your lens. I understand that you think that this works, and you may be the exception. You may be the exception there, but if that were the case and you are the exception, you're probably better off trading your own money, because it's just like this kind of strategy doesn't work for us.
Yep. Yeah, I think especially with your firm that has so much emphasis on live and makes the process to get to live so simple, you do want to make sure that the traders that are reaching that stage are valuable to not only your firm, but also to their own success, because that is ultimately what they should be doing it for. And for me, it's like, I always say to people, like, you get out what you put in. So if you're going to trade from the energy or the frequency of desperation, well, then the market is going to ensure that you remain a person who's desperate for money. Like, you're not going to get more money out of that action. It'll get taken away from you, and you can continue being desperate. Or you can trade from abundance and detachment and be more from a place of, I'm going to actually size down because of this news event, as opposed to size up. Then you're going to get a significantly different result. So I think that's awesome. A lot of firms, in fact, as well, are like launching their own trading platforms. I want to come back to the trader psychology, but I want to go into like that thing in detail. So I wanted to ask you, like, a lot of firms are releasing their own trading platforms at the moment. Is there any plan for TPT to release their own at some point?
Yeah, we actually have had one for some time. I get this question quite often.
Okay, let me ask it to everyone. No,
No,
joking.
no, it's a really good question. And I have an answer for it. It's just the data feeds, because they come from the exchange. There's always like, I don't want to get too far in the weeds because the users don't need to know this, but there's like a thing called order management systems, risk management systems, that all of these orders are coming through at the same time. When you have a lot of traders, a lot of things can happen. Like a lot of things can happen where orders aren't even being executed properly. There's like fills slippage. There's a million things that can go wrong, and without, every time we test, there's something else that's wrong, right? So these platforms that are out there in order management and risk management systems, they've had 30 years of going through the process of getting the bugs out, and it's not just one thing. It's one thing like getting the market data in, like flowing properly. Like, you can have a problem with that. You can have a problem with people, their orders. You can have a problem with, the risk management handling. Like, there's so many things that go into it. So again, as TPTs, usually not the first. That doesn't mean that we aren't working on it. It's just we want to make sure that it's right before we put it out there. Because what will happen, and what's happened in the past, is what we've seen from our competitors: roll it out, it's not very good, the backlash is awful, trying to deal with like refunds and like, it's a mess. So we do have some really cool things coming, but we just want to make sure that it's right before we release it.
That's super honorable and dope to hear, to be honest, because I think you're 100% right. Like, I have seen so many platforms being released, bugs all over the place, and it just leads to more issues. So I do think it's really admirable for you guys to take your time with it. And like, hey, Apple came after Microsoft, and look where Apple is. So it's not about the speed at which you get to the end goal. It's about getting to the end goal in the right way. Earlier, we were talking about traders. So I'm now curious about, like, what are the most common mistakes that you see traders make, and what unsuccessful strategies keep showing up?
The most common mistake is just oversizing. Like, if you have a $4,000 loss limit and you're trading 15 micros, 15 minis, like,
Minis.
you might as well. And then people will say, well, why do you let people trade 15 minis if they shouldn't be? It's like, well, you should be able to control, because when you build your account, you should be able to start to size up, but it shouldn't be from the beginning, right? So this is, well, then don't give me that leverage. Well, if I have to babysit you to be disciplined, like that doesn't really work. That tells me a little bit about you as a trader as well. So it's always the sizing to start. It's always the sizing. Frequency too. And then the last part is latency. When people are using latency where that is harder to mimic in live is where we see, when I told you about divergent performances, like that's really where we start to see, okay, you know, this trader's not doing so well, and then I can kind of point to why he's not doing so well. It might not have anything to do with psychology, actually. It might have to be like, you're taking a 5 second trade at, European close or something, and like the market's going crazy. Like that's not really sustainable because you're getting a fill that, yeah, on a 15 lot spread across 5 accounts as 75 lots. I don't know, you're getting that fill in live, right? So I could start to hone in on exactly why you're kind of falling apart, but usually it has something to do with size. Most of the time size, then latency, and then sometimes size and latency.
So, what type of trader style risk approach mindset tends to actually succeed in this program?
Further away, smaller and further away. You give me a guy, I said this the other day on a podcast. Give me a guy's metrics. This guy holds for 37 seconds. This guy holds for 3.7 minutes. This guy holds for 37 minutes. Almost always the guy on the right at 37 minutes is going to be more reliable than the guy at 3.7 minutes and way more reliable than the guy at 3.7 seconds, right? So I'm not saying that that's always the case, because there are people that are exceptions to that rule that trade very well on short time frames. So I'm not saying you all have to be intraday swing traders. You don't have to swing trade or anything like that. You could be closer to the market. It's just the closer you get, the harder it is. The more you're relying on latency, the more you're relying on infra, that you're not going to win that game against the big boys. Like you're never going to win that game against Jump, Virtu, Citadel. You're never going to, they're making the market, not you. If you're trading like a market maker, you got very little chance of succeeding.
I like that you said that, because also, so number one, like everyone can trade different trading styles. There are some scalpers who are phenomenal, so maybe they don't hold their trades for very long. Then there's, the flip side of that, which is you're an investor or a swing trader, so you're holding for months, maybe at a time. But then we have the day traders. And for day traders, it's like, how do you find that happy medium, that happy middle? But for me, if I was looking at someone's psychology and I saw that they were consistently leaving trades within a few minutes versus someone who is holding for like an hour, I would trust my capital with the person who was holding for an hour, because I would know that they have more belief in their system than the person who's just stepping out. It's not a guarantee, because maybe someone does have a scalping strategy that works phenomenally for them. But in terms of, if I just saw data, that would be my first thing. And then in terms of like someone who is holding a trade for that long, it would be, is that person's also trailing their risk? Like, are they putting their stop underneath maybe the previous swing low as they go, like trailing it, not in accordance with how much profit they want to make, but more so in accordance with, has the market actually told them to get out? Because there is also the times when someone could be holding for an hour, they're seeing higher highs, higher lows, but then they see a market structure break. And then it's, should you actually leave your position at that point? Because at that point, there are multiple, probably isn't going to make sense. Your trade is probably going to come all the way back down if the market structure has broken or news has happened or something has happened.
Yeah.
So there's so many different levels and layers to this game.
That's the old, like, know when your idea is no longer valid. So as a trader for myself, and this won't work for everybody, I would find myself, when you go back to your psychology, is, the ES would open and it would open in the middle of yesterday's range. And I'm like, hey, I know that good chance it's going to break the overnight high today. The market would whip around a little bit like it always does. Most of it's noise. And the market would get to where I expected it to. And this is a tale as old as time. I mean, and I guess I somehow wouldn't make money, or even worse, lose money. So what I started to do, and what I can't recommend things because I'm not a financial advisor and whatever, but I just say, we see people do better when they trade kind of like a central idea, and then just know when that idea is no longer valid. So like it's either going to work or it isn't, but you're sure as hell not going to get chopped up in the meantime. And so for me, when you talk about the hour-long trade, that's a big part, but for a reason that people don't understand. If you're holding for an hour, that means that your size is small enough where you've been able to withstand the noise. See, in prop, somebody can't hold for an hour trading a 15 mini in NASDAQ. There's no way, because you're either going to make 50 grand or you're going to get blown out before that hour. So the length of time tells me that their size is small enough too. It's a, it's also an indicator of that they're trading with the right amount of size where they can kind of stand up to the gyrations of the normal, what do you call them, like harmonic rotations that the market does, to use a trading geek term.
I love trading geek terms. It's fun. Hit me with all of them. Yeah, no, it sounds really cool. Like for me, but what really stands out, even if someone is like sizing down or holding for that long and having the ability to hold that long because they're now sizing down, is just that trader is trading from detachment from the outcome. Also, they're not scared about what's going to happen. They're
I
like,
love
we're
that.
willing to let it see.
I love that. I
So,
call it outcome independence. If you're taking
yeah.
a trade and then it wins and you're happy, or it loses and you're sad, that's the wrong way to look at it.
Then there was something wrong with the trade. Yeah,
Yeah.
exactly. It can't be like that. If you could give one piece of advice to new traders, what would it be?
Prop trading and derivatives in general give you an unbelievable opportunity to have access to leverage that would be very difficult to get with your own funds.
Hmm.
So a fraction of your allotted size is still a fantastic opportunity for you. And what I mean by that is trading, if you can trade 15 minis at a TPT account, just trading one, the notional value of one NASDAQ futures contract is astronomical compared to how much your barrier to entry, and
Facts.
if you were trading that on the equity side.
Yeah.
So if I gave anybody advice, sizing down isn't something, it's not like a cross to bear. Oh, I size down. Like, you still, it's sizing down is still unbelievable amount of leverage, right? That you can't access through the normal equities markets. So I think people try to go so fast and they forget about even 1/15 of the size they're allotted, or 1/5 of the size is still an extraordinary opportunity as a trader to make, you know, to be able to make substantial amount of money in a single day, in a week, in a month, right? I'm not saying that it's easy. I'm not saying that everybody will do it or that it is for everybody. I'm just saying that it's still such a great opportunity, even with less size than full size.
Facts. I just did I didn't were you guys at the Prop Firm Expo in London by any chance?
Our Nicole was, who's our director of partnerships. I wasn't there. I was with my family. I had to pick up my kids from camp, so I wasn't there. But I know that was awesome.
That's freedom. That is freedom, right? That it's like, what do you work so hard for? It's so you can go do that. Like that's the whole point, not to like
Yeah.
sit at your desk the whole time. So amazing, you made it. So I did this little interview with Prop Firm Match, and they had like asked me a question, but my response to that was very similar to what you just said in terms of I think everyone should be trading with a prop firm these days. You should have your own portfolio too, but why wouldn't you take that opportunity when you have the opportunity to make so much money without risking so much of your own capital? And the only thing you need to do is follow your plan. Let probabilities play out in your favor. No one said it's going to happen overnight, but I always tell people extend the timeline, because a lot of the times people are like, I want to make 5K in a month, even, right? Like even someone new starting out, they're like, I want to make 5K in a month. I want to quit my job. So I'm like, okay, do you think that's achievable? And they're like, I don't know. And I'm like, okay, if I said I want you to make 5K over the year, do you think that's achievable? They're always like, yeah, obviously, that's easy. And I'm like, okay, that's the mindset I want you to trade with. The
Yeah.
5K will come a lot faster if you can just extend the timeline. Um,
Yeah.
so
Yeah,
yeah, um,
that's good. I mean, I could tell you work with a lot of traders, but we say similar things. It's you know, I don't know. It's an awesome opportunity, and what you just said is one of our biggest points that we try to key on is, even if you're trading your own funds, that's great. Like we actually say the end of the rainbow for you is to come through TPT make enough money and go trade on your own. Keep 100% of the profits. But the good thing is some people need the discipline and the loss limits. But, you know, the others need to know that you're going to come into TPT and you're going to lose.
Yep.
You're going to lose at first. But it's a hell of a lot cheaper than the 100,000 I lost when you're paying it to the market.
My God, yeah.
You know what I mean? So like
Yeah.
I could show you for days people's scorecards. Like, okay, evaluation P&L minus 96,000. The amount of money that person paid to lose that 96,000 was like, you know, 1,800 bucks. Okay,
Yeah.
so congratulations. Like you should take that as a win. You just got a lot of
Yeah.
experience and you
Yeah.
saved yourself $96,000 that, you know, and you probably weren't going to trade as big or as crazy because first of all, your broker probably wouldn't let you because you didn't have enough money to put in your account. But at the same, it is like real world example of, you know, your tuition at prop firms, even if you never made it, you're still way better off than if you went and put the days of putting $5,000 into a brokerage account and going to trade that. Those days are over. Why would
Yeah.
you do that?
Exact. I'm so with you on that. I'm so with you. But I think even if you have your personal portfolio, which I do, I have my personal, but I also trade with props. Because again, it's like, why would I want to risk my own capital trading futures, for example, when the contract size is like the market can move so largely? I don't want to put that much risk on the line when I can just trade one of my funded accounts and have a better chance at actually making money. If you had to give traders a blueprint for actually improving their odds of becoming profitable, what would that be? Do you have anything?
The detachment from the results is a big one. You already mentioned that one. That's what I always say is like if you know build a process and you try to build an edge and then become outcome independent. So you're just trying to take a series, one trade in a series of trades. That's all you got to think about, and then you can reevaluate after n number of trades, and you got to follow. It sounds so cliche, but you know I think that we all are so results orientated that we think that hey the next trade has to work, and if it doesn't, it's something wrong with my strategy. It's like these are probabilities you're playing.
Mm-hmm.
Like this is, you know, and so, I mean, some of the best traders, and again, you know, it's like a baseball player going up to bat, or you said like a hedge fund manager with a 30% win rate. Like best baseball player in the world, it's 320. So that means that, you know, 68% of the time, then he's out. Does that mean he's bad? No, it's like it's just a probability. You just keep going up there. And if you trade small enough, you just want to make sure that you can show up tomorrow and still be in the game because the only way to lose the game is
Exactly.
to be out of the game,
Exactly.
right? So,
Yep.
and I think that that's what happens with a lot of traders is they just run out of money because they end up out of the game before they can win the game,
Yep.
right? And that's
So
because
is that
it's
what you
just
would say? Like if you wanted to give some like practical advice, for example, like actionable advice that traders could actually take away to manage their risk during an evaluation, I'm guessing like sizing down would be one of the top ones for you.
yeah, exactly. And then also, you know, double the time that you think that it should take you. If you think that hey, I should pass this evaluation in 3 days, like give yourself six, because
Yeah.
again, one leads to the other. The faster you try to go, the bigger you size, the less likely you are to succeed. And so, you know, it always goes back to going slow. Like if you go slow, you're going to end up in a much better place 6 months from now than if you go fast. In 6 months, you look up and be like, man, I just lost a bunch of money and I'm in the exact same spot I was, you
Exactly.
know, 6 months ago.
If not worse,
Yeah,
because
yeah.
you've spent more money than you needed
Well,
to. When,
not only that, but then you like lost all the emotional capital too. Like
yep,
you
exactly.
lost money, and that's harder to
When,
replenish. It's like you don't believe in yourself anymore. You start to question. You start to say, "Hey, I'm so bad. I might as well just do the opposite of what I think." I mean, how many traders have
and
thought that?
and
So that's like
and then the market starts going the other way, and they're
psych,
like, oh.
yeah. Start psyching yourself out with reverse psychology. It's like, oh, I'm so bad. I might as well just go the other way.
What would you say, like, the success comes down to for traders on Take Profit Trader? Do you think it's more psychology or more strategy in your experience?
Um, that's a really good question. I would say normally I would say it's always psychology, but I think strategy would rules the day there because again, if your strategy is full size all the time, like it doesn't matter how good your psychology is,
Mm-hmm.
right? You're just going to be in this perpetual cycle of just like gambling behavior to try to take as much money. I think a good way to put it and the way I try to tell people is I think you got to be very careful with getting your mind and you got to think about okay, this is nav and this is the market. I want to beat the market. So too many traders now are going this is nav against TPT. It's like okay, I put in this much, I take out this much. It's like no, like that's the only thing that's going to do when you think like that is get you kicked out of TPT. Because TPT wants you to face off with the market, not against me.
Yeah,
I'm supposed
yeah,
to be your
yeah.
partner.
Work
I'm
together.
supposed to be
Yeah.
your partner.
Oh, we were friends.
Yeah, exactly. It's like, guys, what are we doing here? So,
It's so true though. It's so true. But then the other thing that you just said is like it's traders versus the market. Whereas like my viewpoint is it's the trader versus themselves. There's
yeah,
no one else involved. It's just you versus you. But like your point on the mental capital, like if someone doesn't fix up by the 6 month mark even, they've done so much damage to their mental capital that they didn't need to do because it kind of goes back to that point I made about 95% of your actions are driven by your subconscious. So
yeah,
what have you just trained your subconscious on? What actions are you going to be taking from now on? Way harder to break once you've wired them in. Not impossible, but way harder.
yeah.
So yeah,
That's a really good way to put it too. And I think that one thing you said there is um, when we're talking about mental capital, is you can't first of all you can't. It's harder to replenish that first of all,
mhm.
but I just don't. I haven't seen. I've seen traders bounce back way up more often with financially than they can with the mental stuff, and it always comes from somewhere else. So I always say to traders, the good thing about turning the corner in trading, and I learned this in professional sports too, is you just learn a lot about yourself. If you don't fix yourself, you're not going to show up in the market. You're going to show up in the market like you are as a human. So if you're always frustrated, if you're always if you're an explosive person, like then you're probably going to break keyboards. If you're breaking keyboards, you're probably not going to be cool-headed enough to trade. So you got to fix
Facts.
the underlying problem to become a good trader. So when you turn the corner in trading, you've made this like fantastic like metamorphosis as a person that you're like, hey, I got good at trading and I'm a better person too, and that helped
That's
me.
just like,
You know
yeah.
that's exactly what made and that sounds like so woo woo and cliche, but it's real. Like
Yeah.
you bring your luggage with you to the market, and you got to fix that.
Facts. My kind of mindset, right? That it's literally it is that it's who you are off the charts is who you're going to be on the charts. The only thing that you can do to bring separation to that, I would say initially to give any traders who are watching some advice, is create an identity of a successful trader. So if you're ever going through a challenge in life, even if you are going through a challenge in life or something that might be unrelated to trading, who is the person that would show up that has already achieved that goal? And now operate from that person, operate from that alter ego. There's way more that goes into this, like to build a psychological profile to make sure that your brain believes it. But who would that person be? And so while your brain is rewiring, you can say things like, all right, James, I haven't got this. Like, I'm stressed out about this thing. I don't feel like I can do this thing. So you go, all right, James, you're going to stay here. I'm going to pull in whoever the alter ego's name is. I'm going to call him forward right now. And then you operate from that point of view. High achievers, high performers do this all the time. So I'm just going to give a
Yeah.
random example, but like
Yeah.
Beyonce, I am Sasha Fierce, right? She has a different alter ego when she
Yeah.
goes on stage. versus who she's in an interview. She's like a mouse. She's like, yeah, guys. She gets on stage. She's like larger than life, right? So
Yeah.
high performers do this all the time. So when people do need to change that thing in their mindset, that is where I would say you can have that separation first. But once you build enough evidence, your brain has rewired and then you just become that person anyway. So
Yeah.
you don't need the alter ego.
That's exactly why I say like it's a very similar trait you get in professional sport where it's like, okay,
Yeah. Oh,
I'm,
100%.
I'm me the footballer now, and like I'm a savage. And then when I get off I can be a kind, nice guy off,
Yep.
but right now for the next 2 hours I'm going to be a savage, and that's the James that shows up when I play football or hockey or whatever you're good at. And you learn actually how to do that. It's a very important trait in one to translate from sport to business and to trading. That's why when people say, "Tell me about trading versus sport," and I say, "Man, there's so many similarities. There's so
So
many
many. Yep.
similarities." To play a sport at the highest level or near the highest level, that you really have to. You get these kind of early on, and they drag you. That's why you give me a good athlete that knows how to persevere. I can turn him into a badass trader.
Yeah, I love that. Regulation in the prop trading space keeps shifting. So how are you staying adaptable as those changes come?
Well, it's the regulation that everybody thought was coming after the MFF thing didn't really come, but it was. I think part of the reason is because the CME realized that this was really good for the industry, and a lot of stuff that was happening on the FX side, like there's no ability to like change the spreads and stuff like that. I mean, I don't have to tell you about FX. I know you know it well, but what what it forced the industry to do was be more transparent about certain things in the industry, and I think that made the industry better. And what it also did was it pushed more firms to put more people live. Now, because some firms are just kind of starting down this path, I will say from experience at TPT that we did it and went, like, let's say thousands of traders live, right? Whereas before we had, a couple hundred. And that comes with its own problems when you talk about regulatory problems. That comes with, in a proprietary trading space, now you have, it's like damned if you do, damned if you don't. It's like one more traders live for better regulation. Great, put all these traders live. Now like these traders are breaking the rules, and now I got them coming at me for another reason, right? So when we talk about regulation, I think that the conversation really needs to be bifurcated into regulation for you know simulation foolishness versus regulation for disruptive practices once the traders are in the live market. And those are two very different things, but they both fall under the regulatory umbrella. So at TPT, we don't have any issues with people saying they were widening the spread, or you're giving me bad fills, or like this is a conflict of interest. We almost have none of that because we put the most traders live. We do have some issues, and you can probably see this on Reddit with traders going, "You're kicking me out because you're saying I'm spoofing." It's like, guys, I'm not making up these rules. We have third-party software that's saying you're canceling more than 75% of your orders that you're putting in the market. That means that whether it's one micro or 1,000 minis, they don't care. Like one might affect the market more, and there's an argument to be had there, but there's no argument when the CME made the rule and the CFTC says these are the rules, NFA says these are the rules, CME is obligated to enforce those rules. So they come to me. So now guess what? I'm obligated to enforce those rules. And my team is obligated to enforce those rules. So from the regulatory side, I think what you'll see if we're foreshadowing Prop 3.0, if we're in Prop 2.0 now after MFF, Prop 3.0 is, hey, like CME knows this exists now, and they want to know that you have the playbook out. The traders know the CME rules. They're abiding by the CME rules. Nav and James aren't colluding to take no position in the market. One's going short, one's going long. Like that's the easiest way to get kicked out, because that's the easiest way for us to lose our licenses, right? And so that's really what we're more concerned about on the regulatory side, which is very, very different than what it was 2 years ago. It was like, hey, we got to put more people live. We got to put more people live, because everybody was talking about like the conflict of interest of prop trading, and so that's really where the difference and the nuance of the conversation is a bit different.
Yeah. Do you have any features planned for TPT towards the end of the year or by the end of the year?
Yeah, we have. Well, we have more stuff coming out on the metrics side. We have some rule changes coming out in the next couple weeks, actually, that will make it better. Like, these aren't kind of give and take. These are more trader centric, trader improvements. Better program. Again, we're looking at the nano. We're looking at single stock futures. We're looking at alternative paths too. Whereas, like, you right now at TPT, we tried to always be really simple, like very simple, like not 15 different things you got to think about, or I got to choose from this plan or that plan or this plan, and that plan is different than this one. And so we've always purposely been, very straight, only a couple options, and maybe in the near future adding a couple more options with different rule sets, because we've realized that some people might prefer better rules knowing that they're going to get less size,
Yeah.
right? For that's probably a bad example, but that's where the trade-offs come. It's like, okay, we know that this works for you, for the trader and for the firm. We don't know if this works yet because we haven't tested it. So what we're going to do is we're going to test this beta, and we're going to say, hey, there's going to be some adjustments to the rules where we're going to give you a bit more what you want because you've asked for it. And at first, we're going to pull back some size over here to protect the firm at the same time, because again, we're putting these people into live. Like, we've got to make sure that that the money is protected on the back end too.
Yeah. Where do you see the futures prop trading industry heading over the next few years?
Well, that's my job as the leader of the company. Is like, where is this
Where are we going, James?
where are we going? We are going to I think we're going to a place where, first of all, we're moving more towards the old brick and mortar model of prop, where it's going to be tougher for traders. As the traders have gotten more sophisticated, they've become, I wouldn't say like more entitled, but a small group of traders have become more entitled. And you're already seeing it, that the firms are tightening up. And they're not tightening up as much as like traditional brick and mortar prop, but it's getting tighter. It's not like a Wild West, do whatever you want. Because for so long, the rules were so bad for the trader that you could let the traders do whatever they want, and the firm was still protected. With competition, the rules got better and better and better and better and better and better for the trader. And now as they start to take advantage on top of that, of those better rules, then it becomes not suitable for the firms anymore. So that's why you see some firms going under that are making kind of like knee-jerk reaction decisions. I think the immediate future is you're going to see firms tightening down. You're already seeing it. From there, I think that you see more firms controlling their vertical, where, right now a lot of that OMS, RMS, all of that stuff is rented from third parties. FX side, it was always Meta. They took MetaTrader, they took that away. On the future side, it's NinjaTrader, which is a great partner of ours. They are kind of the gold standard over there. But firms are saying, hey, I want this to be more, prop centric. I would like to have this feature, and then they go build it themselves, right? It's and I think that combined with single stock futures, prediction markets starting to drift into futures. I think that these are all things, but I think in the next 12 to 24 months, you're going to see more firms trying to control their own vertical and be their own shop. And that includes brokerage, that might include clearing, that might, controlling all the way up and down from the exchange all the way through, grassroots into prop, where you're acquiring these traders through prop, giving them the opportunity. Once they're good, you're sending them to your brokerage, you're sending them through, and this is no secret. I mean, I think the first person to start doing this was Top Step, or trying to do it. And I think that we've all realized that there's a lot of things to think about. You get into a much heavier regulated space. There's a lot bigger teams needed, a lot more headaches, a lot more, and that's what makes it challenging. But that's also, I think, where the market's going, because as it gets more competitive, it becomes too commoditized and everybody's just doing the same thing.
Exactly. There's nothing that really becomes unique anymore from
Yeah,
that.
yeah.
That's
That's my there's my CEO hat right there. Nah.
okay. Well, speaking of CEO, so you've been a founder who's stayed CEO for 4 years. So what leadership lessons have mattered most to TPT success and your success?
Wow, that's a loaded question. I think again, I think from my days of being an athlete and being a captain, it really helped me navigate into like a business life. I always say to my team, I'm like very unqualified to be a CEO of a large company, but
No, you're
I think it comes back to people, right? You treat people well, they treat you well, and we've always been treated our people very well. We have incredible, retention at TPT, but I also am surrounded, my leadership group, I'm surrounded by ex-athletes, people I trust, that, I have no problem telling anybody on my team that they've lost their fucking mind, excuse my language. And they had no
fine.
problem telling me that. So we have this like
Yeah.
radical transparency in the team. And it's fun. Like to me, this is a game. It's no
Yep.
different than hockey. It was like, okay, I scored 25 goals last year. How am I going to score 30 this year? Like, I don't know how I'm going to do it. I'm going to figure it out. I'm gonna have. I always want to be the dumbest guy in every room that I'm in. I want to surround myself with people that are much more intelligent. It's not very hard, but surround myself with much more intelligent people, and constantly learning from others to try to make TPT the best I can. And that's, you know, I mean, you'd be astonished to hear what I'm doing on a daily basis. I mean, I'm writing to a, yeah, firms in Chicago that do certain things that we're struggling with that are probably never going to answer me. But I'm trying anyway. I'm just trying to learn from people that have solved the problems that we're trying to solve before, and not being afraid of failure, and have good people around me, and we'll see where we can take this thing. I mean, that's the only answer I can give you, but. I'm not too much of a long-term thinker or a plan B thinker. I see where the market's going, and I'm just trying to get there. Try to get a little bit better every day.
You adapt as you go.
Yeah.
I mean, it sounds like first of all, that's fantastic that you have a high tolerance for failure, because the most successful people have the highest rate of failure. So you have to be willing to put yourself out there and to get rejected in order to get whatever the result is that you want. And I also thought it was really interesting that you said about the score. Like if you were trying to get a high score on like your next hockey game, you wouldn't be focusing on the score, for example. It's not about like, how do I get the highest score by just trying to hit the maybe hockey puck into the goal as many times as possible. It becomes, how do I improve myself so the score increases as a natural side effect? In other words, the profit
That's right.
increases as a natural side effect. So how do you personally define success for TPT?
So I want more people that come to TPT to live a life without fences, right? So I want them to think, as an athlete, I always said that it doesn't have to be the way that everybody says it has to be. Like I was undersized as a player, and it's like, yeah, you can't make it because you're small. Yeah, I can. Watch me. Okay, it just says like, oh, you gotta work a 9 to 5 to be able to be successful. It's like I want more people um, to be able to say, to buck those trends and be like, no, I don't have to do that. If I do this correctly, um, and I'm passionate about it and I work at it, I can do this. I can be a prop trader and make a very good living. Is it hard? Sure. Like professional sport was hard, and there was no guarantees. So I want to empower more people to be able to do that. And so how do I do that? I make a fair playing field that's sustainable enough for take profit trader to be around, but to give traders more and more opportunity to succeed in the live market. Okay.
Yeah.
And then it's up to them. Like I can only do so much and it's up to them, but at least giving them the opportunity. So that's what I'm here for. And I know that if they're succeeding in the live market, I mean, hell, like I'm getting a percentage of that money, right? Like I'm going to be successful as they get more successful. So
Yeah.
I'm always doing this dance knob of, protecting the firm and making sure that I'm running a sustainable business versus giving traders the best opportunity to live their life without fences. If I can match those two, if I can marry those two things, we'll take over. And that's what I'm after every day. Like, how do I achieve that balance? Because if it's like this, I mean, I can make it so everybody can trade one micro and charge $1,000 for an evaluation. That's never going to work. I could
Yeah.
charge $50 for an evaluation and give people a $20,000 loss limit and put everybody directly to live. Like that's not going to work either. So we're always constantly trying to do this navigation of making it better, and if we make our systems better, our staff better, if we make everybody better, then we can make our risk better. Like all of that stuff will allow us to keep more money so that we can make the rules better for the trader, so that we can, you know, give more opportunity, more traders in live, more opportunities for people to succeed. So that's really what I'm after.
I love that. I love that so much. So you did kind of answer this question already, but what is your vision for TPT in the next, let's say, 5 years or 10 years? And what are you doing now to work towards that?
So I think that the vertical integration is the first thing that sticks out. I mean, I think that anytime you can rely on yourself and not rely on external, like, and I'll give you an example. Like, again, NinjaTrader is a fantastic partner of ours. Everybody knows who they are. It's no secret they were acquired by Kraken. What happens if Kraken's already in FX, right? Funding. If tomorrow NinjaTrader said no more prop firms, there'd be a lot of people that'd be in trouble. you know so how do you insulate yourself where you can really rely on yourself, and still be brand agnostic? Like if we built a badass system, that doesn't mean that we would cut off any of our good partners, because there's traders out there. Not You might love NinjaTrader, you might have been trading on it for 20 years. Like I'm not the guy that's going to tell you, if you're a good trader, I want you. Like I don't want to say, hey, you can't trade with us if you like NinjaTrader. No, it's like
Yeah.
I want to vertically integrate, and I think that that's where the future is, and that's why I think that's where other firms will go, is so that you can really depend on yourself. Because I know if I as long as it's in my hands, we'll be okay. As soon as
Yeah.
like it's out of my hands, then I'm like, and that's when I start to lose trouble sleeping at night, because we won't be outworked, but there's yeah, when the tech and all this stuff is in other people's hands, and sometimes that worries me.
Mm. Yep, I agree. You do see a lot of issues happening with third-party platforms as well, but I am so on board with you that you shouldn't take away someone else's ability to trade on a particular platform because they're trading with you and because you have maybe your own platform now, for example, because it's just going to leave a little bad taste in
Yeah,
someone's
yeah,
mouth, in my
exactly.
opinion. Um,
We want
but
them we want to have the best product, and if we have the best product, it's like, I don't want to sound like Elon here, but you make a
I
good
like
product.
Elon.
I no, I do too. I love Elon, but what I said is, if I said this quote, then everybody would be like, "Oh, you just stole that from Elon." But just you make a good product, you don't even have to advertise it. People will find
Yeah,
you and they'll use it. So if my product is better, then they're going to use it. And if it's not, I shouldn't force them to use it. They should use the product that they want to use,
yeah.
right? So that's how I look at it. And if I want to be brand agnostic, platform agnostic, and I just want to build something that's so good that people they want to trade with it because it's so good.
That's right. I love that. I love that. I've actually very much enjoyed this conversation, but
Yeah,
I have one more question for you.
sure.
Last one. So, is there anything else that you would like traders to know about TPT or trading in general?
I don't know anything that scales like trading does, and that's why I chose trading. The ability to have on any corner of the world a market that's open 23 hours a day, continuing to add new products, single stock futures, access to markets around the clock, with the ability to do it and learn it for a fraction of the tuition that it used to be. When I call this tuition,
Mm.
it's an opportunity that I think more people should take advantage of and probably will. I mean, people coming over from equities, from FX, I think you'll continue to see that. So if I had to say something, it would just be it's a great opportunity. You don't need to do it overnight. You don't need to feel like you got to take a huge swing. Trade smaller, trade slower, you'll get there. But it's even small and slow is better than I'm still looking for a better alternative, and I haven't found one of a way for somebody coming in to learn a skill that can scale at almost, I don't want to say infinitely, but it can scale without having to add more warehouses or like you would scale another business, um, like trading. And I think that that's the big draw to trading is that it scales. You can do it from where you want, and as long as you're learning and participating in a sustainable manner, like we would love to have you at TPT.
Beautifully said. James, it was so amazing to have you join us today. So anyone who's watching at home, if you enjoyed this, make sure that you like this video and subscribe to the channel for more episodes just like this. We appreciate your support, and as always, we will see you guys in the next one.